Okay, now solvency ratios, if we need to define them, they are calculated to measure, to analyze the long-term solvency or long-term stability of the firm. If you remember, when we started the unit on ratio analysis, the first ratio which we did was the liquidity ratio. And the liquidity ratio was basically to measure the ability of the firm to meet its short term obligations. Okay, that is the firm in a position to pay for the current liabilities. On the other hand, when we see the ability of the firm to meet its long term liabilities, we are talking about the solvency ratios. The long term obligations. Is the firm competent enough to meet its long term obligations? So, there come the solvency ratios. Under this, the first ratio, very important ratio, which we do is the debt to equity ratio. When I say long term liabilities, I'm talking about the long term debt taken by the firm vis-a-vis the equity of the firm. So, as the name suggests, debt equity ratio will be debt divided by equity of the firm. How do you calculate? Debt will be sum total of, say, the debentures, long term loans, any other long term borrowings by the firm, while equity is equal to share capital. Now, this share capital includes both equity and preference share capital plus the reserves and surplus. Now, ideally, this ratio should be 2:1. This is considered to be the ideal ratio, that debt is double your equity. Any value higher than this means that the firm has excessive debt, while a value lower than this means that the firm is not utilizing the benefit of debt. So ideally the ratio should be 2:1, and this ratio measures the relationship between debt and equity of the firm. Okay, so let us start with a simple question on debt equity ratio. The question is there on your screens. Start solving the question, class. If you want, I'll just display the formula alongside, so that will help you solve the question. Now, take 2 minutes, solve the question, then we'll discuss. So yes, class, many of you have given the correct answer. The answer is 0.57 is to 1. Aryan percentage में नहीं होती है ratio. This ratio is always in a proportion form. Okay, so our ratio of 0.57 is to 1 means that we are not utilizing the benefit of debt, in the sense the firm is more dependent on equity funds than debt funds in its capital structure.
मैम एक बार आप वो रेशियो वाला एलेबरेट कर दो ना कि 2:1 अगर वो रहेगी जो आइडियल रेशियो है, उससे अगर वो कम रहेगी तो फिर क्या होगा और ज्यादा रहेगी तो क्या होगा?
अगर if I start elaborating, it will cover some part of finance also. So if you want, I'll explain. I have no issues. अब कितना आप लोग grasp कर पाते हो उस पर डिपेंड करता है. चलो मैं बहुत I'll try my level best कि मैं बहुत simple terms में आपको ये बता पाऊँ. Now all of you know by this time that revenue minus cost. ओके, हम अकाउंट्स में यही करते हैं. रेवेन्यू इज क्वांटिटी सोल्ड इनटू द सेलिंग प्राइस पर यूनिट minus the cost of production is giving you profit. Now this profit is actually earnings before interest and taxes. Now on this earnings the firm has to pay taxes also, and if it has any debt, then on debt we pay interest. Okay, now what is the benefit of debt in your capital is that आप पहले सीक्वेंस में चलते हैं. अर्निंग्स बिफोर इंटरेस्ट एंड टैक्सेस, पहले इंटरेस्ट माइनस करते हो और उसके बाद टैक्स माइनस करते हो. इसका मतलब कि इंटरेस्ट की वजह से आपकी टैक्स पेमेंट कम हो जाती है. It is at this stage that you get your profit after tax. तो अगर बिल्कुल सिंपल एग्जांपल लें, अगर आपका अर्निंग बिफोर इंटरेस्ट एंड टैक्सेस 100 आ रहा है, एक फर्म है जिसके पास 100 रुपए का डेट है और उस पर इंटरेस्ट 10 रुपए है, और एक फर्म है जिसके पास बिल्कुल भी डेट नहीं है. तो दोनों के लिए your same EBIT now has different earning before taxes. Okay, wherever you feel that something is not clear, you can ask. So what happens is, okay, I'll just continue the example here. So with the two firms, say firm A, which had profit before tax or earning before tax of 90, and firm B which had earning before tax of 100. अब इन दोनों फर्म्स का प्रॉफिट बिफोर इंटरेस्ट एंड टैक्स 100 रुपीज ही था. अब अगर मैं टैक्स रेट, let's suppose it is 50%. Now how much tax will firm A pay? 45. And how much tax will firm B pay? 50 rupees. So what has been the benefit of having debentures in your capital is that your tax liability has reduced. Okay, your tax payment has reduced. And that is why we say that interest is tax deductible. Okay, so if you are sure that your earnings capacity will be good in the future, if you are expecting a stable earnings in the future, then along with own funds, along with equity, to some extent, debt should also be included in your capital. एक बेनिफिट मैंने आपको टैक्स का बता दिया, एक बेनिफिट होता है कि इसकी वजह से जो डिविडेंड होता है इक्विटी शेयर होल्डर्स का वो भी इंक्रीज होता है, बट देन दैट गेट्स far fetched into finance. I don't want you people to get confused. So what we say ideally is that this ratio should be 2 is to 1. If you are sure about the earning capacity of your business, you can to the maximum amount have double the debt as much as you have the equity in your capital structure. If you're not using debt, then you're not getting the tax advantage that you can get, and you're not taking efforts to improve the earnings of the equity shareholders also. Okay, so in this example, simply 0.57 मीन्स कि आप वन पोर्शन इक्विटी के अगेंस्ट सिर्फ 0.57 पोर्शन डेट यूज कर रहे हो, जो कि एक्चुअल में आइडियली आप डबल भी यूज कर सकते हो टू बेनिफिट दी इक्विटी शेयर होल्डर्स. ओके, आई होप थोड़ा बहुत समझ आया होगा इसमें. Sumit, you were the one who asked the question.
Yes, ma'am.
Okay, but
Yes, ma'am.
once we do finance in your third semester, then we'll have this concept again and again there. So I'll explain this to you there in detail then.
Ma'am, do we have capital budgeting in our syllabus later on?
No, that's better. That's all finance. So that will be in the third semester.
Okay, ma'am.
Okay, in the third semester. Actually, we are running different semesters this time. अदरवाइज जब आप लोग अकाउंट्स पढ़ते हो तो सेकेंड ईयर वाले कॉर्पोरेट फाइनेंस पढ़ते हैं. ओके, वन मोर क्वेश्चन ऑन डेट इक्विटी रेशियो ऑन योर स्क्रीन्स. सॉल्व दिस क्वेश्चन. So class, the answer is 1.40 is to 1. Similar question we did last class on similar question we did on return on investment also, where you were given a negative reserves and surplus. So that needs to be deducted when you are calculating the amount of equity. And yes, 1.405 we have 406 जो answer आ रहा है, that is correct. So your debt to equity ratio is 1.40 is to 1. Okay, so this was the first solvency ratio that we have covered. Now we come to the second solvency ratio, which is the total asset to debt ratio. I'll just write down the formula, though in this question you are given the formula also. Total assets of the firm divided by the long term debt will give you the asset to debt ratio. When I talk about total assets, I include both the fixed assets and the current assets. Assets plus current assets. And long term debt, by this time you know, is your long term borrowings plus any long term loan that has been taken by the firm. So here you have this question, a very small question. Please start solving the question and see what is the total asset to debt ratio. What we need is only the long term debt, while you are given total debts in the question. So please make the adjustment accordingly. So the answer is 2:1. Okay, you are deducting the amount of current liabilities from the total debts to get your long-term debt. So 14 lakh by 16 lakh. Yes, that will give you the total asset to debt ratio. Wait, sorry, I have read out the values incorrectly. You calculate the total assets using the liability side approach. तो आपके total assets जो बनेंगे वो 32 लाख बनेंगे, while your long term debt will be 16 lakh. So another approach to your total assets can be, since balance sheet asset and liability side is the same, that is they have the same total, तो अलग से आपको फिक्स्ड एसेट्स और करंट एसेट्स यहाँ पर नहीं दिए हुए, तो आप टोटल लाइबिलिटीज क्या बनती हैं फर्म की, वो होंगी शेयर होल्डर फंड्स प्लस टोटल डेट्स. ओके, तो वो आपकी 32 लाख बन जाएगा न्यूमरेटर, and your denominator of long term debt is 16 lakh. So that gives you the ratio of 2:1. So one approach of calculating total assets is fixed assets plus current assets. पर अगर आपको assets की value ही नहीं दी हुई तो आप liability side approach use कर सकते हो. या आपकी total liabilities कैसे calculate होती हैं? They are the sum total of shareholder funds plus the total debts of the firm. I hope this is clear to everyone. One more question on total asset to debt ratio. I'll just zoom it in. Okay. Start solving the question. So the answer here is 2:1. Pranath, just check, have you made a typing mistake there? So your answer for total asset to debt ratio is 2:1, everyone. Just check you're getting the same answer. Now, what do we mean by this ratio, or what is this ratio trying to communicate? As I told you, it is giving you the relation between total assets and debt of the firm. It is actually telling you how much safety the creditors have. Creditors are the people who are extending credit to the firm. So through this ratio, they see how much debt, how much borrowing of the firm is covered by the assets of the firm. So higher ratio means higher safety for the creditors, higher safety margin for the creditors. Okay, so a firm which has a lot of assets with respect to debt will be more safe from the creditor's point of view. Yes, Pranath, you have a question.
Ma'am, I am getting it as 2.4:1.
2.4 क्यों आ रहा है बेटा? टोटल एसेट्स कितने आए आपके?
60 lakh.
एक मिनट, I'll just check.
Okay, ma'am.
Total assets are coming to, yes, 60 lakh. And what about the total borrowings, debt?
Ma'am, 25 lakh.
25 क्यों होंगी बेटा? लॉन्ग टर्म प्रोविजंस भी तो आएंगी.
Ma'am,
Long term provisions are also part of the long term debt of the firm. So that will be 30 lakh.
और मैम रिजर्व्स किसके अंदर इंक्लूड होता है?
रिजर्व्स तो आपका शेयर कैपिटल का पार्ट होता है, इक्विटी का पार्ट होता है. तो वो तो आपने एसेट्स निकालते हुए ऐड करा होगा ना.
यस मैम.
हाँ,
ठीक है मैम.
ठीक है. Any other question? So let's quickly take up one last ratio today, which is the proprietary ratio. Proprietary ratio or shareholders ratio. Now this is here. Shareholder funds divided by the total assets of the firm. So how much of the total assets of the firm are being financed by the owner funds, क्योंकि शेयर होल्डर्स को हम ओनर्स बोलते हैं फर्म का. तो ओनर्स अपने तरफ से जो फंड्स लाए हैं उनमें से कितना पोर्शन टोटल एसेट्स का फाइनेंस हो रहा है. So all of you know shareholder funds are equity shares plus preference shares plus reserves and surplus. And total assets are fixed assets plus current assets. So one simple question on proprietary ratio is given. Again, higher the ratio, better it is, because it provides more safety margin to the creditors, to the people who are lending money to the business. Okay, so please solve this question. If there's any doubt, you can ask. Okay, so total assets, all of you know, fixed assets plus current assets. For equity or for shareholders funds, there can be two methods. I have written the two approaches here. One is the liability side approach, जो हम generally follow करते हैं, equity shares plus preference shares plus reserves and surplus. But अगर आपको ये information नहीं दी हुई question में, तो एसेट साइड अप्रोच में फिक्स्ड एसेट्स प्लस वर्किंग कैपिटल इज करंट एसेट minus current liability plus minus any long term liability by the firm. So if you check under both the approaches, you will get the same answer. Shareholder funds आपके same आएंगे. And in this question, yes, the answer is 0.7:1. तो आपका इक्विटी में these three elements will come and your total assets are already given to you in the question. So your final answer becomes 0.7:1. I hope no one is having any problem in this. So this will be 1,75,000 divided by 2,50,000. So one last question for the day. Here you have to calculate two ratios, the proprietary ratio and the total asset to debt ratio. Start solving. I'll also start with your attendance by that time.